Good morning. Welcome to Stock Market Today for Thursday, December 19th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities were little changed to slightly lower in Wednesday's trading as investors look past the impeachment vote. Treasuries were mostly weaker with the curve steepening. The dollar was higher against the yen and the euro. Gold ended down 10 basis points. WTI crude little changed following the U.S. inventory data report. As we get to the desk this morning, futures are kind of mixed after Asian markets were also mixed overnight. European markets are little changed as well, kind of getting that holiday feeling, right? Treasuries are weaker across the curve. The dollar is weaker against the yen and euro. Gold and WTI crude are trading flat in pre-market activity. So not a lot to speak of from a market moving perspective here this morning. So let's take a look at the S&P 500. And I realize that this is tough to see, but the first bullet point, a mirror image. Yesterday's trading activity looked so similar to the previous day that I'm going to say it's close enough to call it a mirror image. Near-term support is in the 3050 to 3100 range. Our major market ETFs are still overbought by our work. That's based on the shorter-term overbought, oversold indicator that we use at Chaikin Analytics. It's designed to tell us if a stock or a fund are overbought or oversold within the context of their existing trend. So what I can say right now is that in the near term, the major markets are overbought within the context of an uptrend. From a longer-term trend and momentum perspective, RSI is in bullish ranges, but we're still watching that small divergence that we've been talking about past couple of days, right? Market makes a new high, indicator makes a lower high. That's what's known as a negative or bearish divergence. It's a warning sign. It's kind of a wake up and take notice here. I like to tell people it's a good way to use it to calibrate your aggression, right? If you were looking to get aggressive on the long side, here and now, maybe you might want to temper that aggression a little bit. Continue to focus on leading stocks in leading areas of the market, but just realize that markets are overbought and there's a small divergence in place. Chaikin money flow remains bullish, although it has come in a bit over the past few days. So from a trend perspective, up and to the right remains the trend, confirmed by momentum, confirmed by Chaikin money flow. Maybe here in the near term, it makes sense to temper aggression a little bit, but that's a little bit of nuance. You have to know yourself and your time frame. Taking a look at a market in a minute now, what I'm writing about in our note today to Chaikin Analytics clients. Well, stocks show a little response to the impeachment vote. Widely expected that President Trump was going to be impeached yesterday, and that was the case. The market barely blinked. Small caps make a new 52-week high. Breadth metrics remain constructive for the U.S. equities. On Thursdays, we look at market breadth. I realized I wasn't here last week, so we haven't looked at it in a couple of weeks. We'll take a look at it here a little bit later on in the show. Value continues to show improving relative strength, and as I said, futures do point to a bit of a mixed open here today. Taking a look at the power bars for the major indices, the Dow lost 7 basis points yesterday, took the power bar from positive to flat. 5 bulls, 5 bears there. S&P 500 was virtually unchanged yesterday, 125 bulls to 74 bears. NASDAQ slightly higher on the day, 24 to 14 bulls to bears. Small caps were an outperformer, and there has been a trend. You notice that when bonds trade lower, as they did yesterday, and yields move higher, small caps tend to outperform. 758 bulls to 239 bears in the small cap index. Real estate rebounded. We've been talking about real estate quite a bit lately. It's been under a lot of pressure, both on an absolute and relative basis, but it caught a bit of a rebound yesterday, up 1.42%. But check out that power bar for real estate, which now has a bearish ETF power gauge rating here at Chaikin Analytics. Only 3 bulls for 14 bears in that sector. According to the Chaikin power bar, small cap stocks and large cap stocks are bullish. Major markets across the board, however, are mixed. Let's take a look at our stock of the day now. And apropos, because we were talking about metals and mining yesterday, our algorithm auto-generates Reliance Steel for us to look at today, a metals and mining stock that closed at 120.84 yesterday, down 20 basis points. Reliance Steel has a very bullish Chaikin power gauge rating due to very attractive financial metrics, very positive expert activity. Does have some weak earnings performance, and technicals are middle of the road, but I'll call them tilting bullish, right? 20 factors, 5 in each of these 4 categories give us our very bullish Chaikin power gauge rating. Strong trend above a rising long-term trend line. Strong industry group. We touched on metals and mining yesterday. Let's take a look at the process now. Ribbon at the bottom of the screen tells us where the rating is and has been over the past 12 months. And you can see we've been on a bullish or very bullish rating since July. Shortly thereafter, Reliance Steel begins to outperform the market and continues to do so. Market and model are in agreement. Chaikin money flow is bullish. My only real issue here is that the overbought, oversold indicator is in the middle of the road. We had a nice breakout, and it looks like we're consolidating that breakout around the 120 level. For those of you who are a little bit more on the aggressive side, I can't argue with being long Reliance Steel here. For those of you who would rather wait for a little bit of a better setup, i.e. the overbought, oversold indicator becomes oversold, I really can't argue with that logic either. Again, knowing yourself, knowing your time frame, knowing your style. The breakout through the 105 level remains in place as we consolidate. In an ideal world, I'd love to see this consolidation work this overbought, oversold indicator down to an oversold reading and set up an opportunity as long as the stock is holding above that kind of 115 mark. Continue to watch Reliance Steel. The breakout does remain in place. But definitely an area of the market, metals and mining, where we have become more focused and will likely continue to be focused as long as it remains an outperforming / leading area of the market. Let's take a look at the sector tracker now. Movement of the major sectors over the last 5 days. Energy at the top of the list. Energy continues to trade well. Crude oil back above $60. We talked about EMP stocks a couple of days ago, how they were now more bullish than bearish stocks in the XOP. Services still looking a little weak. I mean, it looks to me like the picture around energy could be improving slightly from a fundamental basis, but we're not there yet based on our process. Technology at the top of the list. We'd love to see that. Let's watch the chip stocks today. Micron reported after the close last night, and that stock was trading higher. You know the importance that I place on semiconductors, especially the relative trend within semiconductors. When semis are outperforming, generally bodes well for the market. Utilities, a little bit of a bifurcation between utilities and REITs here. Utilities seem to be decoupling a little bit from the rate trade in the near term. Financials continue to do well as rates move higher. Healthcare, another area of the market where we have warmed up as it is emerging leadership. Discretionary comms, materials, middle of the road, staples, industrials, and REITs underperforming. Notice that over the past week of trading, over the past 5 days, real estate is the only group that has been trading lower. Our industry in focus, speaking of financials, you know we've warmed to them and we like them now. Regional bank services, which over the past 6 months have been outperforming the S&P 500 by 1.77%. And the power bar ratio, which measures future potential, increases the odds that that outperformance is likely to continue as it's very strong. Check it out. 83 bullish or very bullish stocks within the regional bank services industry for zero, count them zero, or don't count them, bearish or very bearish stocks. It's currently ranked number 1 of the 21 subsectors that we look at. Some of the names that you may want to take a closer look at: QCR Holdings, QCRH, Heritage Commerce, HTBK, and First Foundation, FFWM, all have very bullish Chaikin power gauge ratings. So take a look. They might warrant doing a little bit of extra work. And let's take a look at what we're looking at as it relates to KRE. The regional bank ETF has a very bullish ETF power gauge rating at Chaikin Analytics. Strong trend above the rising long-term trend line. Take a look at the consolidation and then breakout. So, right, from a purely technical standpoint, we were in a consolidation from February until December. So the majority of 2019 spent going sideways as the market was moving higher, and that led to this underperformance. But starting late October, early November, the regional banks started to outperform bullish money flow area of the market where we want to be focused for long ideas. The fund itself is currently overbought. So ETF traders, I don't necessarily think you need to chase it here. But for those looking for individual stock ideas, this is a good area to go hunting for long ideas. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Leidos, some positive reactions to an acquisition that they made, send the stock higher up by 4.5%. CTVA, no real news there, up 4%. Win, The China allowing an increase in the money transfer limits sent the gaming names higher, the ones leveraged to Macau. Win was up 3.9%. Mosaic, no real news, up 3.5%. And Dish getting some financing in order for a wireless expansion. That sent that stock higher by 3.3%. FedEx down over 10% following their earnings announcement. UNM down 3% following an investor meeting. Ulta was an outlier in the retail space. Retail was strong yesterday. Ulta was not, down 2.3%. Arconic, they are splitting into two separately publicly traded companies. Stock lower by a little over 2% yesterday. And FLT, there was a negative short report published yesterday that sent that stock lower by 2.25%. Now, on Thursdays, we look at breadth. I was not here last Thursday, so we have a little bit of catching up to do. And for me, the most interesting dynamic at play here as it relates to market breadth, what we're looking at in the top of this chart is the percentage of stocks in the S&P 500 above their 200-day moving average. The middle is the percentage above their 50-day moving average, and the top is the advanced decline line for the S&P 500. Now, remember, we were talking about some divergences, a series of lower highs as the market was moving higher. We've kind of worked off those divergences, both the percentage of stocks above their 200-day and the percentage of stocks above their 50-day continuing to move higher, breaking above, call these resistance levels, if you will. But what I see is a healthy majority of stocks in long-term uptrends with 79% above their 200-day moving average, and a healthy majority of stocks in intermediate-term uptrends with 75% above their 50-day moving averages. Ideally, we want to see above 60% to signal a healthy majority of stocks are in uptrends for that time frame, and that does remain the case. And even if we took it one step lower to the shorter term, the percentage of stocks above their 20-day moving averages is above 70% as well. So breadth remains constructive, continues to confirm the trend higher that we've been seeing in equity markets. All right, so as we build the mosaic, momentum, breadth, seasonality still a factor, right? We want to kind of defer to the price trend, and the data points that we look at continue to confirm price moving higher. We'll wrap it up with the AD line here, trading near all-time highs with the market, so confirming the price strength that we have seen in the broader market. Now, small caps has been an area of the market where we're getting a lot more focused. Here's the IWM, the iShares Russell 2000 ETF, which, similar to the banks, right? So a bit of a rate trade here, right? As rates have moved higher, the regional banks have broken out. As rates have moved higher, the small caps have broken out as well. Look, right? This is that same consolidation that we saw in the regional banks. Topside breakout, retest, move higher. All the while, the RSI shifting higher, a series of higher lows as the RSI for the IWM shifts into bullish ranges, and the fund remains above a now rising 200-day moving average. On a relative basis, at the bottom of the chart there, we can see that IWM has broken the downtrend line relative to the S&P 500. So I think it starts to make sense to be looking at some small caps as you do your work, as you look for very bullish and bullish stocks in leading areas of the market. I think it makes sense to start to incorporate some small caps into that analysis. Take a look at the bottom of the screen there. ETF rating for IWM is bullish. We've talked about the power bar ratio for small caps, 758 to 239. So odds favor a continuation of the uptrend, the recent uptrend in small cap stocks. I think the breakout through 160, right? Classical patterns. We have a low at 145, a high for the range at 160. Add 15 points to the breakout level. That could get you to a near time, an upside objective rather, of about 175 for IWM. Finally, we'll wrap it up with value. Another area of the market where we've seen some rotation and we're starting to look for ideas. VTV. Bullish ETF power gauge rating, 105 bulls, 39 bears for the Vanguard Value ETF, which has broken topside, continues to move higher in a move that's confirmed by momentum as the RSI here as well has shifted to bullish ranges. The fund is trading above a now rising 200-day moving average. So this rotation that's playing out, I think you want to pay attention. That'll wrap it for today. I'll be back tomorrow.